Good evening, everyone, and welcome to our online live sharing class. So, as everyone knows, since our company has come to India, we have made up our minds to become the number one in the Indian asset management market. Now, we hope that our live streaming class will be the future as the first live class platform for investor education in the Indian market. Now, I would like to first thank everyone for their continuous support. Now, today is Tuesday, so as you may know, the market will be closed tomorrow. So, many professional investors will be taking another day off. So, I hope everyone can get some good rest and spend time with their families. Now, let's take a look at what we will be sharing today. Okay, so what I am going to be sharing with you today, in addition to the normal market analysis and the news, I have prepared for today the content on how to find stronger UC limit stocks. So that's going to be a topic under the UC limit stocks. Now, since I have told you some related information some time ago regarding in this aspect, when it comes to the most critical moment, we have to continue talking about it. Because stocks with daily limit are also divided into strong ones. Now, how do we find such stronger stocks with UC limit is quite critical. Now, because only by finding it can we go trade it and reap in the corresponding profits. Additionally, tonight, I'm going to continue to share more experiences on Wall Street. So we're going to do some more Wall Street insights, including some trading experience and trading concepts. In fact, these aspects plays a very, very important role and significance in our daily transactions. Okay, so without talking anymore, let's start our today's contents. So first part of the evening, we always usually do the market recap. So we're going to do a recap on the two Indian domestic indices. The trend of the domestic market today, so the Nifty 50 as well as the Sensex, have experienced a sudden change. It performed well for majority of the day, but in the last hour before closing, it saw a significant drop, completely erasing the day's gains. So let's get into a little bit more details into the Nifty 50 and the Sensex index separately. Okay, kicking off with our Nifty 50. So due to the influence of the warm atmosphere of the global stock markets, today the Nifty index in the Indian market opened high, showing a strong trend after the opening, shaking upward all the way. However, until the last hour right before closing, a large amount of profit taking selling appeared in the market, causing the index to plummet in a straight line, ending the day in a negative territory. So there are several significant points in today's market. So number one, the Nifty 50 index hit a new all-time high on the intraday today, but this historical high does not have much significance for the trend of the market. So this point should have been shared with everyone prior. Point number two, we were prepared for this high followed by a drop. We shared this with you yesterday as well. The Nifty 50 index faced pressure from the previous high. Now, from the trading perspective, the higher the price, the more you should sell rather than buy. Now, we made this very clear to everyone during the trading day today. So, in the past two trading days, we did not advise buying stocks or recommend any. Guys, is sticking to the strategy of selling high and buying low the best strategy in the current market? Okay, point number three. What we just shared with you is regarding the trading strategies. However, in terms of the market's directions, do not be alarmed by intraday highs followed by the drops. Even so, the overall pattern of the market shaking upward has not changed. Similarly, a dip presents a buying opportunity. Now, of course, for regular trading, the adjustment today is not significant enough for the whole Nifty 50 index. After all, it just hit a new high on the intraday scale. Now, the last note that I'm going to be making is the one thing to note is that trading is just trading. As long as you respond correctly during the trading day, there is no need to research the reasons behind it. So as you can see on the graph, a little bit shaky. It goes up, down, but we are going on a upward shaking module. Okay, so next, let's take a look at the trend of the Sensex index. Again, the overall trend is similar to the Nifty 50. So both opened with a gap up in the morning and then rose all the way until a sharp decline began in the last hour, right before closing. Now, the only difference between the Sensex index and the Nifty 50 index is that the Sensex index did not hit a new all-time high today, but it approached previous highs levels, so which also acts as our new resistance levels. Now, even without referring to our Nifty 50 index, we should all know that the current position is not favorable for buying stocks actively. Instead, we should consider adopting a contrary trading strategy. Now, this is the presence of the resistance level at the previous high point in terms of the technical analysis. This doesn't mean that the resistance level cannot be broken through. But often, when the price reaches the resistance level for the first time, it tends to fail to break through effectively and then it falls back down. So we can observe that the current price position is close to the upper channel boundary, which is also a resistance level. Now, therefore, in general, in a situation like today, it is correct not to buy stocks actively. Instead, it would be more appropriate to be selling stocks. Now, at this point, some members may ask, why didn't you notify us to sell stocks today? This is a very good question. Now, the main reason we are not doing a lot of selling today is because when we bought the stocks initially, we repeatedly emphasized the importance of controlling our positions and being cautious with our stock holdings. Now, in these situations, the price fluctuations in today's market should not have much impact on us. So there is no need to take action. On one hand, in our stock holdings, there are a few stocks with just minor losses. In this strong bull market for a small number of stocks bought at low levels, even if they're in a loss position now, it is not necessary to set tight stop losses as of right now. Now, it is important to ensure that these purchases were made with caution and that the stock is still in an overall uptrend. So that is what we're kind of looking at when we kind of dive into our indices. They're both starting off the day strong, and then we kind of just dropped at the last hour. Okay, so after reviewing the markets for our domestic indices, I believe everyone should have a more specific understanding and interpretation of the market. So up next, we're going to continue to pay attention to the some important financial news, some major international or domestic news. Okay, so first piece of news, Indian economy on upward trajectory. So these are always good things to look at when our economy is growing. Now, the National Council of Applied Economic Research, the short form is the NCAER of India, stated that Indian economy has shown strong performance recently with bright prospects for the future. Now, in the monthly economic review for April 2024, the NCAER emphasized several key indicators demonstrating economic resilience. Now, for instance, the Purchasing Managers Index, or PMI, for the manufacturing sector reached a new high in 16 years, indicating strong economic growth. Now, additionally, the leading digital payment system, Unified Payments Interface, the UPI, recorded the highest transaction volume since its launch in 2016. The collection of goods and services tax, or GST, also saw a significant increase, reaching 18 billion rupees in March, marking the second highest level since its introduction in 2017. Now, the total number of UPI transactions in March 2024 reached 13.4 billion, showing a substantial increase of 55.3% compared to the previous year. Inflation indicators also showed a positive trend, with the Consumer Price Index, CPI, overall inflation rate decreasing from 5.1% in February to 4.9% in March. Core inflation followed a similar trajectory, dropping to 3.2% during the same period. Now, of course, developments are always mixed, like temporary lackluster performance of the market's employment index. However, overall, India's robust economic growth implies more business and profit opportunities, as economic growth is often associated with increased consumer spending. With rising consumer confidence and income, people are more likely to purchase goods and services, driving up the stock prices of related companies. Now, this creates a very positive feedback loop. We have always emphasized that the strong economic fundamentals of India's stock market have been steady for a long bull market, and this point does not need any wavering. However, as traders or investors, it is necessary to adjust different trading strategies at different stages of the market while maintaining a consistent trend view to adapt to the market. So it is very, very important for all of us as we are investing our money that depending on where the market is, we kind of have to adjust our trading strategies. Sometimes we go for long, sometimes we do intraday trading. We always have to adapt to what a market condition allows us to. Okay, next piece of news. Inflation cautious U.S. interest rate options. Market cautiously pricing 2024 Fed rate hikes. So let's take a look again. So according to a Reuters report on the 29th of April, the United States secured overnight financing rate futures options show a higher possibility of the Federal Reserve raising interest rates by 0.25 percentage point in the next 2 years due to the resilient U.S. inflation and labor market. So the SOFR, which is the secured overnight financing rate, is currently at 5.31%. Now, measuring the cost of borrowing cash overnight in the money market collateralized by U.S. Treasuries, it is a benchmark rate used for pricing derivatives and loans denominated in the dollars. Now, the likelihood of SOFR rising is low, but not insignificant. Few market participants truly expect the Fed to raise rates again. Now, the Fed is likely to cut interest rates only once this year or not cut at all and maintain higher rates for an extended period. Now, currently, there are various opinions and viewpoints in the market regarding whether the Fed will cut rates this year and by how much. So, in fact, as long as there are no significant changes in U.S. macroeconomic data, such as the inflation before, such news or market opinions are unlikely to affect the stock market prices changes significantly. So just like the previous prediction that the Fed could start cutting rates in September. So in recent period, whether in the US market or the Indian market, the impact of quarterly financial reports from March will be more significant. The performance of large US tech stocks and the positive earnings on the Indian banking sector will have a considerable impact on the market. So I have shared my opinion with you before that the market's expectation for a Fed rate cut has reached a low point. So as you can see from an interest rate curve on the left on the graph, the rates have remained unchanged for a long time. It is highly probable that the only positive news will come in the future and there will be no negative news. So we're going to maintain our viewpoint as of that. Okay, so if you guys have a minute, take a look at the rates and inflation charts, right? So for the past year, rates have maintained pretty steadily. You know, a lot of people are talking about Fed rate cuts. We don't kind of bank on that anymore. So we just continue to wait. Okay, everyone. So there is something I need to tell you all here. Since our company have entered the Indian market, we have always received support from our friends and the vast investors in the Indian market. Everyone here cares about us very much, and I want to take this chance to thank everyone here once again. So as I mentioned before, since we have entered the Indian market, in order to better serve the vast investors in the Indian market, we will definitely cooperate with various well-known institutions in India during this process. So recently, I have been in discussions and preparations for this matter. So I can tell you that tomorrow, our company will hold an industry exchange with some of the outstanding counterparts in the Indian domestic markets. Now, of course, it will also be press conference for my company's full entry into the Indian market. So we're going to finalize the follow-up cooperation matters with the related cooperation institutions, and then we're going to sign the relevant cooperation agreements. So many people here have also been very concerned about this. So what kind of services can we bring to you in the future? What kind of service content will there to enhance everyone's trading profits? So I will further introduce and share these series of contents with you. So tomorrow evening at the same time at 8 p.m., we will still share the detailed plans and arrangements for the later stage in a live broadcast manner to give you a more detailed sharing and introduction. So everyone is welcome to actively participate. We'll talk about it near at the end of the lesson tonight. Okay, so we're going to be diving into more UC limit topic stuff. So in the previous discussions, we have gradually shared with everyone some knowledge, some content about the topic of UC limit stocks. Now, of course, in order to deeply study this area well, it will require more time and more learning. Now, I will continue to share content on this topic with everyone. So today, I want to share with everyone on how to find more powerful UC limit stocks, because we all know that the stocks showing strength are likely going to continue to be very strong. So in a process where a stock is rising more forcefully within their daily limit increases, we can more easily capture a segment of the profit, which represents a relative, like a certain amount of profit, right? So today we're going to be learning about how to search for more of these powerful UC limit stocks. Okay, so how to find stronger UC limit stocks, right? Now, everyone here knows that those stocks that hit the limit on the exchange, some are very strong and then they continue to hit that limit up, which heralds greater profit potential. Meanwhile, we got some stocks that hit the limit up but are not continuing that strong the next day. So for beginners, it is probably difficult to determine the trend after the first limit up board solely based on just the candlestick chart itself. So it is impossible to gauge whether the stock will continue to rise afterwards or whether it will continue to hit its daily limit. Now, as shown in the figure, we can judge whether the stock will continue to be strong in the next trading day or in the subsequent trend. Now, I believe most people are going to be unable to predict, or when they do predict, they themselves also feel that the success rate is not going to be high. So at this time, we need to rely on more tools to make these predictions. If your ability to recognize patterns is precise enough, then you're not going to need other tools. So next, I'm going to continue. I'm going to be showing more graphs, and I'm going to be breaking them down more in the next couple of pages. But as you can see here on this graph, right before the end of the day, we see this ginormous jump all the way to the cap. Now, this is when the exchange no longer allows us to continue to gain. So how do we tell what the next day is going to look like? Sometimes with just one chart, it's not enough information. So as you can tell, like the long green one before the next day, it came back down, right? So the next couple of slides we're going to be going through is going to show you other indicators, other things to kind of confirm trends. So pay attention. Okay, so about how to identify more dominant UC limit stocks. So last time I shared a simple analysis with everyone. However, many people still do not fully understand or deeply comprehend it. So today, we're going to offer a very, very more in-depth, detailed explanation. Now, for most people, just observing the candlestick chart is not enough, and I can't express that enough to make further predictions. So at this point, we can use various indicators and technical patterns for identification. So I'm going to take this chart for example. So I will only explain a segment of it. As long as you understand the principles in it, it's going to be enough. So I call this type the N-type attack of limit up. So which means that the stock price has experienced an increase, then after a correction, and then it rises again. So you can see the three market movements that I've marked with the blue arrows. Now it forms the letter N. Upward movement, correction, and then it goes up again. The more dominant rise we talk about is in the last segment. I circled the last blue arrow, right? Now, in this segment, there were a total of 4 limit up movements. During this upward movement, it also broke through the previous high points. So buying at any of these limit up points, so even if we bought it at the 4th limit up point, can always be profitable as long as we're not too greedy. Now, for beginners, I do not recommend doing so late, right? Now, the N-type attack pattern, as we discussed, even without the appearance of the limit up stocks, it is a very classic trading technique that can be used in actual trading processes, right? So as you can see here, first blue arrow, bang, we go up. And then we hit an oscillation of a little bit downward. So we hit the red to the second blue arrow. And then lastly, we hit the final blue arrow, which makes the letter N. So this is how you can see it. It also kind of looks like the flag as well. So keep in mind, this is the N-type attack. Okay, now let's take a look at this chart as an example. Now there are 3 points that can help increase our success rate in making predictions. So point number 1. As you can see, I've marked the area indicated by arrow 1. Now, this is an upward breakthrough trend. Generally, we consider an upward breakthrough to be a relatively strong market trend, especially when there's also a trading limit up. Now, in this case, the trend is even stronger, and it's highly probable that the next trading day will continue to rise. So over here, you can see arrow number 1, it makes a golden cross. So point number 2, now we can notice that in the initial appearance of several trading limit ups, the trading volume is gradually increasing. So this is very important. Trading volume is always should be opened up. And as most of you remember, I've mentioned before that in the stock market, volume represents capital. So therefore, isn't it true that the more and more capital is flowing into the stock? With a larger influx of capital, can we predict that the stock price will continue to rise in the future? Okay, point number 3. It's another classic buy signal here. Now, the fast and slow lines of the MACD indicator has formed a golden triangle above the 0 axis. Usually, we can also judge that a golden cross above the 0 axis often indicates that the stock price will continue to rise. Now, guys, I've gradually explained some technical skills to you before. Remember to use them comprehensively. So taking this chart as an example, with the occurrence of the trading limit ups already, based on the above 3 points, can't we predict that there will be more trading limit ups in the future? If there will be continued trading limit ups, wouldn't that be a profit opportunity for all of us? We might even say it's a certain profit. So we got the volume, we got the MACD, both confirming that our trend is on a huge upswing still. Okay, so this is another case. Now, as shown in the picture, this case is relatively special. Now, why is it special? Because in this pattern, many of the 4 prices of the UC limit board are the same. That is the opening price, the closing price, the highest price, and the lowest price are all the same. The trading price for the entire day is also the same. Now, boards like this, where all 4 prices are the same, are the most powerful type of UC limit boards. Of course, this case itself is representative to a certain extent, including technical patterns and technical indicators. So let's continue to go through the chart. Now, at point 1 on the chart, we have another classic MACD buying signal. So we can all see that here the MACD's fast line and the slow line did not cross over, followed by a buy signal. Now, does anyone know this kind of buy signal? Has anybody here ever used it before? Okay, so as you can see on the number 1, this is going to be all the way at the bottom on the graph. So number 1, we see both of the yellow and the blue lines all swinging upward now. So what is the next step? Secondly, we noticed that at the beginning of the appearance on the UC limit board, the trading volume also significantly increases, indicating the inflow of funds. So funds. I always say this. Thirdly, at point 3, there is also a breakout pattern in this chart. Now, whether it be funds flows, pattern breakthroughs, or even buy signals issued by MACD indicators, any of these signals can represent a strong signal. Now, moreover, with the presence of the 3 bullish signals combined, the bullish momentum is stronger and the trend is more pronounced. So back to the chart. So number 1, we already gone through the MACD is going on an upswing. Number 2, we checked the volume. The volume has increased. Okay, now due to the 3 reasons mentioned earlier, this eventually leads to point number 4, where the consecutive daily limit stops, undoubtedly tell everyone for a fact that a more powerful daily limit has appeared, where all four prices merge into one. So number 4, you can see it has one line and then it stops and it jumps to the next one and it jumps to the next one. It sort of makes like a staircase, right? So these are the most strongest UC limit boards. They have all the same. That means the selling price, opening price, it sells at one particular price. It doesn't get any higher. It has reached a cap, and that's what it's selling at. So there's a lot of strength, a lot of momentum, lots of funds being poured into this stock. So this is what we're looking for. We're always out here looking for these staircases. Okay, so previously we've shared some Wall Street insights. So after sharing that last time, so the Wall Street family motto with everyone last time, many people here showed a lot of interests. So today, let's continue learning some related contents. Now, of course, personally, I believe that not only do members feel interested, but there are also practical experiences summarized by our predecessors, right? And they are a great help to us in the stock trading. Now, over the many years, although stock prices will change, industries will change, and specific companies will change, the only constant is our human nature. The principles applicable for the last 100 years ago and today, and it's still going to be applicable 100 years later, right? So despite whatever we learn or whatever we see on the stock market, whether it's going to be industries, sectors, companies, these things can all change, but our human nature is the only constant thing that isn't going to change. So what we learn and all these practical skills, it worked 100 years ago, it's going to work now, and it's going to work 100 years later. So these are important insights that we could pick up and apply to all of our trading strategies. Okay, so to be frank, without several years of trading experience, it's impossible for you to forget your entry price. So the first one we're going to talk about is forget about your buying price. All right. Now, it's going to take several years. If you've already been in the stock market for several years, it is time to start getting used to this. Now, when we talk about several years of trading experience here, it refers to genuine trading experience that comes from the repeated learning and earnestly treating every trade. So regardless of the situation, everyone needs to understand why this is necessary. Now, the stocks you currently hold, many investors may care about how much money they've made when the stock price goes up a little each day, and if it drops a bit, they may feel like they're losing. Now, this could lead to being in a state of excitement or frustration every single day. So if you wake up every day and say, oh, I just want to make $2-3, like this is for intraday trading. But if we were to hold stocks for long term, we don't need to keep thinking about how much money we've profited each day. So we should understand that until you actually sell the stocks, these profits or losses are just numbers on paper because the trade hasn't happened yet, or we haven't closed our position. So this is very important. So if today you think that you would have gained $3 and then the next day you be losing $2, it's too much of emotional swings on a day-to-day basis. Now, how much you gain or how much you lose is actually when you decide you're going to close your position. So what should we truly care about? We should care about whether the company's fundamentals have changed and whether the price trend on the technical chart has truly deteriorated. We should genuinely consider the current stock price movement and see if it aligns with our criteria for continued holding or selling. By following our own established standards to determine the strategy to adopt and not letting the daily small increases or decreases dominate our thinking, we can make sure if there's still time for contemplation and learning. Okay, guys, it's hard for people to change their nature, so try to forget about the entry price. This way you can focus on doing the right thing at the right time. So that is something we should always be practicing, right? When you look at the stock's price changes and we don't focus on the macro data. So instead of looking at whether the price stock has gone up, let's go online. Try to find some news about the company. Did they change CEOs? Are they doing a merge? Are they breaking up? Are they coming up with new products? Like, these are all macro effects that have way more significant impact than just watching the ticker going up or down and how much we bought in for or how much profit we're gaining or losing. Because at the end of the day, until we close our positions, these things are just a distraction on a day-to-day basis. Take the time and look into the company. Check reports. There's so many things you can do. So remember, forget about your buying price. This is going to come with some practice. Okay. Now, the market is never wrong, but investors' own ideas are often wrong. Now, when it comes to this point, so when investors encounter difficulties in trading, they often blame the market for being abnormal. And it's easier. It's easier to be like, oh, I don't know why the market is acting a certain way, right? So how could the market rise or fall like this? Now, the market trend is completely unreasonable and so on. Now, in fact, the market is just the market. No matter whether you are in it or not, it's going to behave exactly like this. So the larger scope of the market, the more participants there are, the more representative it becomes. Now, regardless of how the market prices behave, it is the result of the collective actions of all participants in the market. So the market never goes wrong, and it often goes wrong in our own ideas. Now, there's many famous experts on Wall Street. They also often stumble on this rule. So everybody makes mistakes, okay? We're all human. So once they make a prediction, their reputation is more important than anything else. If they think a stock should rise and it doesn't, what's the problem? Now, the natural conclusion is that the market is wrong, right? That the market has not yet realized the value of this stock. So as a result, one by one, the experts fall from their high seats. So there are many stories like this, right? So sometimes all your indicators are indicating something, all the macro news is pointing in one direction, but it doesn't go up the way that they expected. Now, the smarter the person is, the more likely they are to be self-righteous. Now, their decisions in life are usually mostly correct. So some may seem off at the beginning, but ultimately they prove to themselves right. However, in the stock industry, perhaps in the end they are indeed right, but before the market proves it, they have already learned their lesson. They've already made their move. Now, I've always said that the stock market is a place with patience, right? Sometimes the market's not going to correspond to your timing. It's going to go with its own timing, right? So always be patient, always wait, always stick to what you've originally planned for. So do not be self-righteous. Do not be vain. So decide on your course of action based on the information provided by the market and strictly adhere to it, right? This is the only way to longevity in the stock market. So if you've made predictions, if you've made theories, and you had a trading strategy going into a specific stock, stick to it, right? So stick to it, and just focus on yourself. The market is never wrong. The market's going to do whatever the market's going to do regardless, right? So that's one of my favorite quotes by Jesse Livermore. Markets are never going to be wrong. Opinions often are, right? Okay, so for today, we shared quite a lot of content and a lot of graphs too, right? About stocks that hit their daily limit of ups. So we're going to pause that for now. I hope everyone can take some time to understand and digest these contents shared earlier. In fact, in the stock trading industry, there are definitely many ways to make money. So everyone needs to learn more in order to use the appropriate methods at the right time to increase their trading success rate and profitability. So we've gone over a lot of UC limit content. Now it's time to kind of digest, go over it, and study it a little bit more in depth, kind of memorize how these things work. And with these Wall Street insights, these are always very easy, key takes on what you can practice over and over again as you trade. Now, I don't expect anybody to, memorize all of this in one go. This takes many years of practice, and it has to apply to your everyday trades as well. So take some time, digest the content, go over it, and then if you guys have any questions, always feel free to ask. So next, we're going to continue to track the stocks that we recommended for everyone earlier. So a little bit of stock review, right? So first one we're going to kick off with is LT, which is Larsen & Toubro Limited. So we're going to pay attention here, right? So the stocks I share with everyone tonight are slightly underwater. So it's just a little bit up below the cost price. So as for the stocks that have already made profit or have already been sold for profit, I don't really want to discuss them any further since we've closed our positions. When it comes to stock trading, what's more important is how we proceed to the next, not just about results that we have achieved in the past, right? So, it's always important to look at the next step. We're always going to be buying, selling. So what is important is that we focus on what we do next. So currently there's about 2 to 3 stocks that are just slightly below cost value that when we entered. Now, there's no need to worry about these stocks. So even if we haven't set a stop loss and are currently at a loss, I'm going to make sure we recover from that. Now, this is specifically for those who have missed the profitable stocks and ended up with just these underperforming ones. So for our members who have been with us for a longer period of time, I don't need to say much more. The profits you have made this month alone are pretty substantial, so not going to really elaborate much further. So let's take a look at this LT stock. We've talked about it previously, so we'll talk about it again today. There's really not much that I want to say about this stock, but all I want to remind everybody is, in the long run, it is definitely a long-term bullish stock. Now, regarding the trend, it rebounded a few days ago and is currently just consolidating during the rebound phase. So there's no need to worry too much. Hold on to it, just like I have previously said numerous times. We are moving on an uptrend, even though it's coming back down. Each time it goes back, it rebounds up, it's peaking a little bit higher. So this is what I classified as the long-term bull stocks. We're going to hold it for a little bit longer term. That is the purpose of our long term. Okay, so next up, let's take a look at NCC. So NCC Limited. So this stock is probably the most asked about stock. Why? Because the adjustment range of this stock is slightly larger and the degree of being trapped is also slightly larger compared to the other stocks. Now, I'm not going to repeat some basic information about this stock. It just every time I just keep repeating it under some people request, but I'm not going to do it today. So, going to jump into the technical perspective. Now, this stock is also a long-term bullish stock. So, just by looking at the trend in the recent months, it is clearly a bull market. There's no doubt about it. So, where is the problem now? It's just an adjustment in the short-term trend. Now, the pattern here is very clear. There are two obvious technical support levels below the stock. One is the rising trend line, and then the other is the previous low point. Now, in fact, the stock has already started to rebound earlier. Now, currently in the second rebound of the bottom after the first rebound. Now, the stock price will need to confirm the bottom before it could start to rise. As mentioned earlier, regardless of how this stock moves, we will take responsibility for all the stock picks that we have picked in the end. Now, even if trading the stock results in real losses, so what? After all, everyone's positions in the stocks are relatively small, and it won't have a significant impact on everyone's overall funds. So, if we look at it on a monthly projection, maybe some stocks here and there will have like minor losses. That is part of the trading the stock trading game, right? So what we want to do is we want to capitalize on the ones that we gain the most, and then on the ones that we're going to lose, we want to minimize the losses. So don't worry too much. When we recommend a stock, we take full responsibility to the end. I will ensure that we recover this portion of losses and even make more profits later on. So don't worry. We're going to be here for a while. We're all going to make money together. All right, so let's take a look at the last stock. So Redington Limited. So similarly, we've discussed it a few times already before. We won't talk too much about the fundamental situation of the stock as we've already discussed it several times. So moreover, there have been no changes in the fundamentals. So let's directly look at its technical chart. So technical wise, the stock is a long-term bull stock. All the stocks that we've picked recently, when we pull out and we take a look at it on a long-term scale, they're all long-term bull stocks. They're all in a long-term bull market. So breaking through large oscillation range of the 200 to 210 on the weekly chart level, currently the stock price is at a higher level and it's consolidating. Although the stock is down today, the decline is minimal, and the candlestick chart shows a long lower shadow, indicating some buying support below. So from a trend perspective, you can see that the uptrend line remains solid without any wavering. So everyone should continue to hold patiently, and if there are any trading activities needed, we will definitely notify everybody in advance. So, moreover, as we have just clearly stated, we will see through all the stocks that we recommended. So, please rest assured and stay tuned. So, every stock that we pick, we're going to watch it through to the end. And I can promise you, we will be making a lot more money. Okay, and that's going to wrap up for this evening's class. Now, before we end, just a quick few things that I wanted to go over again. So I want to tell everyone that our company tomorrow will invite representatives from major domestic institutions and listed companies to participate in a cooperation negotiation meeting. Now, at the same time, this is also a landmark meeting for our company's comprehensive entry into the Indian market. The meeting will lay the foundation for the development of the Indian market in the future. Additionally, a wealth growth plan will be launched, and the stocks in the wealth growth plan will be even more outstanding. So tomorrow during the day, I'm going to be quite busy. In the evening tomorrow, we will still have a live broadcast sharing session. I will also present the company's later market development plan, as well as the services and content we can provide to everyone, including specific rules and profitability. Now, I will provide a detailed sharing and introduction to everyone tomorrow. So I hope everybody here joins us. Everybody here is more than welcome to join our live sharing class tomorrow. So tomorrow starts at 8 p.m. as usual. Okay, so that's all I have for tonight. Quite excited for tomorrow. Thank you everyone for your continuous support, and hope to see everybody here tomorrow. Thank you. Goodbye.